Hi, and welcome back. Today we're going to be talking about my stocks over the last week and what I've made the most money on. So as you can see, I'm up a little bit on the day. I have been a little bit late. I was hoping to get this video posted sooner, but we'll go ahead and take a look. Over the last week, I've been hit real hard. So as you can see, I'm up still a decent bit all time, but earlier this week, I was looking a lot better. And then Thursday and Friday really took a hard dip. Largely due to the struggles with China and trying to get a trade agreement done. But basically everything I've read says that it's not quite time to sell anything, and I'm looking at this more of a long-term investment channel, and so I'm not super concerned. So we'll go ahead and get started and talk about the things that I guess have affected me the most this week. So the biggest would be Vivint Solar, which is my largest actual stock holding. So you can see it's trading at $763 right now. I've been really high on Vivint. As you can see on the week, down about 10%, but from its high here, I was trading at $964. They released their earnings this week, and it promptly dropped from $964 down to $763, as you can see. So we'll look at over the last 3 months, everything was looking pretty good, moving up, and we saw a huge hit. Over the last year, you can see it even more. It's definitely still on the upward swing. But we'll take a look at why it's gone down. As you can see, I bought a couple more shares on Friday. My average cost is only about $660 right now, so I'm not super concerned. But I lost $51 Friday alone. So I'm still up $32 all time. It's been a pretty good stock for me, but I was real happy going into that earnings call and didn't quite end up the way I wanted to. So as we can see, still trading quite a bit higher than it has been over the last year. But these earnings are not super concerning. I've read into it, and basically the big problem with Vivint right now is that as they're scaling up, they're continuing to lose money. And I've done some research into the solar industry, and everything that I've read has basically said that the majority of their earnings are now coming from leasing solar panels, which can be a good thing and can be a bad thing. Basically, this means that they're putting people on 20-year plans. So even after people are installing the solar units on their homes, Vivint is still making money. So it doesn't look great, but they should be able to make money in the future, and I'm pretty high on that. Right now, they're the number 2 solar installer in the United States, which, they are a large company, and so it's concerning that they're still losing money, but they're number 2, and they're installing more and more units every single quarter. So I am pretty high on them, I would say. We'll go back up and take a look at their 5-year trend. So they didn't go public until just under 5 years ago, and they're down quite a bit all time. But as you can see, this run here, even from 2016 to now, it's slowly making its way up. And everything that I can tell says that this should be a good stock moving forward. But we'll see on that one. Like I said, I'm going to hold pretty firm on that. The other stock that I bought on Friday was another share of Sony. I haven't seen a whole lot of movement out of them lately. As you can see, I'm up 45 cents, so that's really not much at all. But that's the other stock that I bought on Friday. I'm putting money in every week, so that is a pretty interesting thing to look at. So on the week, they're up. On the month, up a little bit. 3 months, still up. Year, as you can see, up and then down. They got hit pretty hard with that last little bubble last year. But again, this is a stock that I think that will do well in the future. As you can see, 77% buy rating on Robinhood. We'll go ahead and take a look. Still, price is higher than it has been the last year. Analyst ratings are pretty high, like I said, and their earnings, positive earnings. Doesn't show their estimated earnings, but I think Sony is going to be a good one moving forward, so I'm excited about that one. The one thing that's kept me pretty stable through all of this has been Bitcoin. So as you can see, Friday was a horrific day, and I lost money on every single stock that I owned. However, Bitcoin is back up to about 11.5 or 11.47, as you can see. On the week, not up a ton. On the month, only up about 2%. But if you start looking at 3 months, the last year, it has been performing well. And so again, this is a very volatile stock, not something that you're going to want to put all your money into or something that is going to be super stable. But as the stock market's been volatile, Bitcoin has done fairly well. So as you can see, my average cost about $9,600. My equity right now, it's worth about $510, so up to 83 all time. So you can see that my stocks are down a little bit, but they were up before this last little bubble in the last week. So we'll go ahead and take a look at my profile. As you can see, up today's Sunday. But on the week, I'm down a little bit, so that's nothing to be happy about, but we'll deal with it. On the month, I'm down. That was about my high right here, or not quite my high, but when my portfolio was doing about the best, so that's not horrible. 3 months, you can start to get to see a little bit better picture of what's going on, and then in the last year, you can see that it's been up and down the last couple months, and I don't know, I would say I'm pretty happy with this, up just over 3% all time. Like I said, I'm putting more money in every week. So we'll have to see and do some more research on what exactly I want to put my money into. Maybe you guys can let me know exactly what you think will work best. But I'm looking for some more diverse stocks, ways to diversify my portfolio. As I've mentioned, this index fund here, I was pretty happy about, but clearly when you're talking about a total stock market index fund, that is awesome when the stock market is doing well, but in the last week, not a ton of movement. I'm actually surprised that it was up the last week just because of how poorly it's done, but you can see in the last month that it's definitely been all over the place and not looking super great. So down $9 on that one all time, but again, not a reason to be concerned or worried because these things happen, and that's a long-term one that I'm looking at. So we'll go ahead and look at this article that I have pulled up. Talks about Ed Yardeni. Not sure if anybody's heard of him, but basically he's, I wouldn't say a stock guru, but a guy who knows a lot about the stock market. And he's talking here about how even though the stock market hasn't performed well in the last month or really great over the last year, he's pretty optimistic that it'll get sorted out, that it'll sort itself out, and that things will look better in the long term. So as you can see, he talks about if you're fearing a recession now, you're going to miss out on long-term gains. So here he goes. He said the outlook for the economy remains positive, and he said this on Friday, so it is very recent. Should keep the stock market moving higher. And it's interesting. He says this has been the most hated bull market of all time because everyone is anticipating a recession. And I guess that makes sense when we've gone this long without a recession. People are looking for a recession, expecting one, and it just hasn't happened yet. So here you go. According to a recent Reuters poll, almost half of respondents believe a recession will hit the U.S. economy in the next 2 years. And clearly the trade war thing is not great, but Ed Yardeni believes that, again, this will get itself sorted out over time. He says recessions are caused by credit crunches. He doesn't see a credit crunch. Even though the Treasury yields are lower, he's not too concerned about that. And here's an interesting piece. He says, to a large extent, this reflects the gravitational pull of negative bond yields in places like Japan and Germany. So for those that are not aware, countries like Japan that are seeing shrinking economies and really struggling have decided that basically to get more money flowing through their economy, it's really difficult to make money on bonds and yields and anything like that. There's a lot of instances in Japan where if you put money into a bank, you're not actually going to gain any interest on that because they want more money flowing through the economy. And that's always been something that I find pretty interesting. So here you go. He has a year-end target of 3,100 on the S&P, so 6% above what we have now. Clearly, that's very optimistic, and a lot of people wouldn't see it that way, but we'll just have to see over the next couple months. So again, we'll go back to my all-time here and wrap this up. So, yep, we're looking good for the last year, I would say, but definitely want to be back up here towards my peak or even higher than that. And again, this last week was looking really promising until that last dip on Friday. So we'll make it work and keep investing and stay at it, and we'll see where it takes us from here. Next week, I'm going to talk about my portfolio as a whole, what I think my portfolio is going to look like, and what I'd like to invest in the future. So thank you. Make sure to like the video and come back for next week.